All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla Inc. is actually now in a bearish run after hitting a new peak. But when we zoom out, it's been very volatile. It's tried to go into a bullish direction, and every time it's about to reach new highs, it falls. Every time it has momentum, it's falling again, and now we're in bearish territory. So as I've stated in all my previous videos for all first-time viewers and investors, 538 is super important that the bulls need a breakthrough. That's the highest resistance level. And 308 is super important because if that gets broken through, this could start to see newer lows and newer support levels. So let's zoom in here and see what's important. So resistance was broken through for about 2 hours, quickly hit new lows all the way down here at 413, quickly rose again because the bulls tried to reappear and break through the 50-day moving average. Did not work, and the bears tore this one down, hitting lows here of 406. So we're going to see here what's important for tomorrow and also our new resistance levels and our new support. So let's go ahead and move this to its new locations. And as we see here, the 50-day moving average is slightly above the price right now, and it is at 420.20. I can't land exactly on 420.20, but that's our 50-day moving average. And once that gets crossed, bulls are in control. As long as we stay below it, the bears are in control. As of right now, bears are dominating this, and the tug of war will be interesting tomorrow. So the first thing is, the bulls want to break through the first resistance level. The highest point before this run falling down is 422.63. If the bulls accomplish that, they accomplish two things. They broke through the 50-day moving average, getting back into bullish territory, and they broke through the first resistance level, confirming that they're in bullish territory. And by turning it into a support at 422.63, they can start to work their way up to newer highs and newer resistance levels. If that's accomplished, then the bulls want to break through the next one, which would be 428.45. But before getting there, they have to break through 422.63, turn it into support, and break through from there, building momentum to hit new highs and newer resistance levels. On the other hand, we have what the bears want. The bears want to continue to bring this down, and obviously the lowest point in the day was 406.29. That's an important support level, but before getting to that one, the first one here, closest to it, is 408.74. And if that gets broken through, I want to emphasize how important it is to pay close attention to how the stock is reacting if it breaks through the first support level, and how quickly is it moving to reach the 406 one, and how quickly is it moving downward to new support levels, newer lows, and are the bulls even trying to reappear, or are the bears dominating this one on the way down? Super important to pay close attention to 408.74 and how quickly is it moving down, because we're already in bearish territory, and by breaking through these support levels, this is just reaching newer lows, further away from the 50-day moving average in a downward direction. So bear that in mind. I want to emphasize that. Watch the behavior of this stock if it breaks through 408.74, and how quickly is it moving closer to 406. And if it breaks through 406, pay very close attention to how quickly it's moving down and hitting newer lows and newer support levels. As always, if you found this video helpful and informative, please do so and subscribe. But don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some money. Well, at the end of this video, that pop-up video, I actually go into deeper detail about the S&P 500 index, and I just want to break it down a little bit to you guys and see what it is that I want you guys to watch. I know I've been saying it in my last couple of videos. Check out the video, and you're like, well, what does that do for me? I'm just looking for the ticker symbol. I want to see the analysis and so forth. Well, this right here is great news for us as investors right now, present day. I know that the Federal Reserve pumps have an effect. A lot of analysis say that, and experts in the future. But right now, in the present, how can you continue to maximize profits? Well, it's been awesome to see the S&P 500 rise the way it has in such a great recovery due to the fact of these pumps. I'm not sure if that trickle effect is already starting to show that these pumps have had an effect where it can actually start going in the other direction, or if this is just due to the fact of the time of the year, people taking profits, the uncertainty that's coming up, or fear, or so forth, right? So that is something that I am already seeing how quickly this is actually fallen. But you can see as it's been falling down that these pumps still have an effect on the market by bringing it up several points. And we're going to go into that in just a moment into detail. But this has been rising up, and it was a great run. It hit highs, and from this point forward, it actually started to fall and it became more turbulent. The volatility has always been there, but these pumps were actually supporting the market on rising up. But we're going to look at the pumps now because this is the state that we're in. We're not in that bullish run anymore. So I'm going to pull this up. These are some of the most recent pumps. This was released right back on the 14th of September, and the next release date is October 14th. So the first one was on the 15th, and we're going to look at that in just a second. The second one was on the 22nd. The third one was on the 29th, and the most recent and upcoming one to be the recent one is 10/6, October 6th. So we're going to look at those dates. So the 15th, this was September 14th. It slightly dipped and it ended off around 33.83, and the next day was the 15th and it rose up to 34.18. That right there is a rise of several points for the S&P 500 index. And again, 21st rising up, and we land on the 22nd. So the day pretty much ended and started here at 32.61, and the end of the run, because then comes the 23rd, the end of the run on the 22nd, which was the date of the next pump, it reached up to 33.21. So again, rose up several points. Now the anticipation here for the next pump and the week that was coming, the end of the week started really strong, started the week strong on Monday, and it started to dip on that Tuesday of the date of the pump. Well, guess what? The pump actually saved it from hitting newer lows and actually created momentum to continue to rise up because it hit 32.28, and before the day ended, it rose up to 33.49. This is actually one of the pumps that I've seen the pump do the least effect in rising it by several points, but I have seen the pump do this before, stop it from going in this direction and rising it back up, creating an attractiveness to the market to bring in obviously more investors and obviously do this effect to bring it up. And then obviously the volatility of the market is normal to be seen like that. So we're anticipating the next one, but what I want to talk about is what does it mean for us as investors that these points of the index are rising up? Well, if the index of the S&P 500 is rising up several points, that means that it is rising up and there's 500 ticker symbols within it. Some of them, not all of them, are rising up with it. So individual ticker symbols are rising anywhere from 30 cents to up to $3, maybe even more. But I have seen ticker symbols rise on the dates of these rises and these points rising on the index. Individual ticker symbols rise 30 cents to $3 per share. I know that doesn't sound like a lot. It sounds like, oh, well, it's 30 cents. Oh, it's $3. I know it sounds small, but per share, it does add up. And I'm not saying that it guarantees you profits, but profits are profits. And I always say that in all of my videos, especially when I'm talking about this. And this is an opportunity to maximize profits and minimize your losses. I'm just encouraging you guys to check out the video. I go into more detail about it. I just wanted you guys to see with your own eyes the dates of the pumps and what it has done. And if we go back to previously reaching these highs and dipping, this pump of the scheduled dates was rising this up in an upward direction. I mean, here are some notes, and I also had notes here, but I deleted it because I didn't want those notes to go ahead and confuse people in the upcoming pump dates of over here. But something that I find interesting is, yes, On the dates of these pumps, the market was rising up to newer highs, reaching newer levels, and going up to the point that it hit these highs. But on the way down, on the dates that the market is rising several points, I mean, you do see it several times before, okay? That's good. But on the dates of the pumps, it's actually rising. It's actually rising. It's actually leveling off, rising, creating momentum to go to the next level. And it actually rose due to the fact of the anticipation of people knowing that there was probably an upcoming pump. So many investors know about this. A lot of people aren't speaking about it, or they're unaware of it. So I'm here to share with you guys that there's an opportunity to maximize profits and minimize losses. Click on the video, check it out. I go into more detail about it. I hope you find it helpful and informative. And thank you guys so much for watching, and let's make some money.